Here, April 2012, both Katie and I have been in our careers for 10 years helping our investors save and invest enough to protect their financial freedom and survival. We commonly talk with each other and reflect and notice and observe investor behavior, and we're frequently very surprised. Brings us to the title today. Investors flee while Dow doubles. 3 years of investor suicide. We went back and we looked at the Dow in March of 2009 when it was at its bottom. It closed at somewhere around 6,500. Today it's at 13,200, meaning during that 3-year period the Dow has more than doubled in value. The question then is, what has the average fund investor done during that time? They have actually been selling out of those stocks and selling at large volumes to the tune of $490 billion taken out of U.S. equity funds during that 3-year period. That's almost $500 billion where investors are selling out of equities and fleeing that to go to fixed income. Picture's worth 1,000 words. Notice here side by side the Dow steadily increasing, doubling in value there on the left. The exact same time period what we're showing is mutual fund either inflows or outflows, and the big red lines going down show that people are selling their U.S. equity funds in large volumes. What else I find interesting is notice that when there was a small correction in the Dow that triggered an even larger sell-off in the equity mutual funds. But this has consequences. Smart Money magazine, the article was titled Main Street's $100 billion stock market blunder. What he did was he took equity mutual funds and looked at starting in October of 2008 versus February of 2012, measuring the amount of money taken out of equity funds due to market timing, and calculated how much they lost. The Main Street investor lost collectively $106 billion during that time due to market timing and poor investor behavior. We're proud to say here at Financial Harvest Wealth Advisors, every single one of our investors that began investing with us or were invested with us in October of 2008, all of them that stayed fully invested are now currently positive, meaning they've more than recovered. They weren't a part of this $106 billion mistake by the average fund investor. Remember, your financial survival and freedom is on the line. Invest wisely.